Let's walk through a trial balance example problem. So it says to prepare a trial balance for Artie LLC with the following account balances. So we have a long list of accounts that they give us. The best first step is to go through and label each account either an asset, liability, capital, drawing, revenue, or expense account. Right? So we'll just start at the top of the list. Cash. Well, cash is an asset. Utilities expense, that's an expense account. Equipment, that's an asset. Accounts payable is a liability. Owner's capital is a capital account. Accounts receivable, that's an asset. Salaries expense is an expense account. Rent expense is an expense account. Service revenue, revenue account. Supplies is an asset. Owner's drawings is a drawings account. And unearned service revenue is a liability, right? So now that we have all of those labeled, we can now start to prepare a trial balance. So this is what a trial balance is going to look like. It's going to have the company name at the top, then trial balance, and then the date that you're preparing it. Then we need to list out all of our accounts. And the reason why we went through and labeled all of these is because we list out our accounts in the order of the expanded accounting equation, right? Assets equals liabilities plus owner's capital minus owner's drawings plus revenues minus expenses. So that's the order that we're going to list them out here on our trial balance. Then the balance, the amount, goes into either debit or credit. The way that we know that, that's based off of our normal balances, right? So assets, drawings, and expenses are all debits, while liabilities, capital, and revenues, those are all credits. Then when we're done listing out all of the accounts, we add up our debit column, add up our credit column, and see what we get for our totals. So the first thing that we need to list out are the assets. Now, we can't just pick any order that we want. We need to list our assets in order of liquidity, right? So cash always comes first. So we write cash with its balance of $10,000. Then accounts receivable had a $7,000 balance. Supplies, $3,000. Equipment, $40,000. So those are our assets, right? And they're listed in order of liquidity. After our assets comes our liabilities. So we had accounts payable and we had unearned service revenue. You'll notice that those balances are over on the credit side. Now, after liabilities are all of the owner's equity accounts, right? Capital, drawings, revenues, and then expenses. So we first want to list out our owner's capital, then our owner's drawings, then our revenue, right? And notice how the balances are going on the side of that account's normal balance. So after our revenue are all of our expenses. So we had 3 expense accounts in this example. We had rent expense, salaries expense, and utilities expense. And all those expense accounts, their normal balances were debits. So we've listed out all of our accounts and their balances. Now we need to total up the debit column and total up the credit column. When you do that, each side will equal $76,000. And they both need to be equal because your debits must equal your credits.